point, more or less. Let's take a look at that on the 5 minutes or the 15 minutes again. So this is what we're looking at. This is the point where you would expect the market to bounce exactly. So if we do bounce at that point, and you would want, or you could wish, or you would want to reduce your risk, okay, you are uncomfortable with holding this size of that position, we expect the bounce at least to take us 50%, alright, if not to contest the moving average and that neckline. So you could have potential to get out of part of the shorts at a loss at 31.65, that value here, line at 32 or 31.90, alright. I believe that the position will reverse and will move higher, okay, and if we take a small loss or if we take a partial loss at these levels, 31.65, it's very important that the trader is comfortable and focused on the trade. We don't want to be uncomfortable holding any specific, comfortable being strong-headed. We will not will the market to move in our direction. So if we have made a trade and the risk is too high, then we would scale out of it, alright, on the belief that probably the analysis is correct, but we will reverse at a lower level than the ones currently seen. And in that case, we will be able to reimburse our losses. Okay, like if this is going all the way to 33, the whole 31.90 or 31.65, and plus of course more profits. Okay. Otherwise, we hold of course the position. Okay, we do not abort. Alright, and we hold our stop loss remains fixed at 31. That's it right here, remains fixed at 31. Okay, so 31, that top point here, we're testing now the top of one. We could be testing the top of that lower one, which is at 31.36. We're currently doing 31.39. Remember that we can fight inside these candles. So long as we do not close inside them, we are safe. Okay, so this is where we are. We are on the breakout zone, and we are on top of local point 1 here. I know it is hard, okay, and it is, let's say, it stretches your nerves, it stretches my nerves too, but you know, in order to trade properly, you have to assimilate risk, always take risk downside it. The important thing is to control risk, like if you know beforehand that we're carrying about 3.15% risk, alright, or 3% risk. If we're really calculating the risk, then we're anyway, there is no risk, of course, there is no risk, no gain, like we say. The important point now is that we are testing the top of a point 1, and we will hold the position because this is how it works. We would like to buy as close to point 1 as possible. There was no telling that we would test the neckline all the way to the local one in it, alright. But this could be actually a good purchase or a good buying opportunity if you still have ammunition to buy into that trade. Okay, however, if not, we stand our ground. We are quite confident that we should bounce at this point, hopefully. we're bouncing really, that's a 1-2, okay. So the trade is correct, it's perfectly okay. We just have to live with the stress. Sorry about it, but that's the way things are in trading. Okay, so unless we are safe and our trade is okay, it's fine. And even you could consider to add a small lot at these areas, right? To recap, we're bouncing here. Alright, we will hold our stop loss at 31. We do not change that. If you wish to be more comfortable holding the position, you could close some of your longs at 31.65 and 31.90. You should see that on the current retraction higher. Okay, otherwise we hold our position all the way to top. Okay, alright, we will of course be observing that as we move along in our analysis. Alright, you might as well start with the sterling, British pound against the Alright, so let's finish with the sterling first. United States, the British pound and the United States dollar. The technical picture has been changed now. Has been changed. Of course, we have long this, so we would like to pinpoint a target where we would collect our profits, or term target and the longer term target. So what we're seeing technically is that the current rise in price, we are currently moving inside an ending diagonal, alright, and we would consider to take targets again at the old high made at 33 before we have another correction, and we'll move along into that diagonal all the way up to 36. Okay, so if you were going to hold this, you would want to hold it all the way up to 37 actually and 36. Okay, so we already did this chart. This is our trade management chart. That was yesterday's trade management chart, and we were going to long 31.78. The market is currently about 40. We were going to long 31.90. We were going to double our lots at 31.90. The current market is currently doing 31.40, about 50 points below that. We still at the bottom of one here, more or less. At the top of one here, I'm sorry. At 31.37, that point here, okay, and our stop is at 31.00. All right. So for today, if you're not actually long this issue, you may consider to long it today at this level. Okay, we have a divergence with momentum, so this is going to be a very good level to long. Alright, a bargain price like they say, and we would consider to long market, alright, once we find or we see a confirmed Elliott structure on positive momentum. This is a 5-minute chart. we would want to see that candle rise, all right, and this momentum turn positive, okay, and we would like to see some kind of Elliott structure form here, all right, if this bounce is correct, like it's happening now. Okay, so by that time, probably market will be doing at least 3180 or maybe even 32. Okay, but when you go long at that point, you will know your exact risk. All right, risk tolerance. You will know the exact risk that you will be carrying or that you will be taking. Okay, which suppose you were going to long at 3180 or even 32, and now the market has bottomed at, looks like it's bottoming at 3130, then you are carrying something like 70 points risk, and then you can calculate your risk management accordingly. Okay, so you could contemplate, or you could prolong the current market. All right, remember we are very strongly bullish this. You could consider to long the current market, all right, once you see there's an Elliott structure on positive momentum, you long 50% inside that Elliott structure. Stop remains 31 or above. Okay, for if the market now bottoms at 31.30, then the stop would be 31.20. Okay, good. Remember that momentum is on our side. We are seeing the positive divergence in this cycle, and we are inside the average 2 range, or we are inside of the pivot daily range. Okay, so this should not break. It could spike, all right, lower, but should not break below the breakout low here. It's very close. I know it's a very, very close entry. Okay, but this is how to be sure that you're in the market, in a profitable market, assuming of course that this works out as planned, and then we will be in good profits, hopefully. Okay, so where is this going? Why are we taking so much trouble to get into it? This is now an update of the daily chart. This technical picture has been updated, all right. We do realize that we bounce at the top of 1 here, local 1 here, okay, exactly. Done already 1, 2, 3, 4 with then an Elliott channel, and is about to do 5. Okay, there is a inverted head and shoulder formation, and this wave 5 here actually takes us 137. This is 138%, all right, of that swing 3, right, from the low here, from that low point here. Okay, all the way to the top of 3 will take you the first reasonable target consider is 1.37. The swing, this is 138.2% of wave 3, swing wave 3, okay? So suppose we read that, all right, from a lower swing, if you were going to use swing 1, so 161.8% takes you to 135, all right? So this is why it's quite important to get into that position. Okay, so the market is now doing 1.3148. All right, because if we do get at the market bottom, we could hold this all the way up to 137 and 135 according to this target projection on the daily chart. Now consider that an investment grade CFD, meaning that you should keep buying and holding. Okay, what exactly does it mean? What is an investment grade CFD? Okay, so this is the weekly chart. If you take a deeper look here, you'll find that we have now a confirmed wave 1, 2, and we did the internal 1 and internal 2. And currently the market has done an internal 3 that confirmed bounced at the top of internal 1. So wave 4 here bounced at the top of internal 1. Okay, so that bounce is quite low. It bounced at about 1.2840, I remember. Currently we're doing 132 or 131.50. Okay, so we cannot expect it to go all the way down to 1.840. We would have to get engaged here into 4, buy into here, buy the cycle lows to go all the way up. So just so projections in wave 5 are going to take us 135 and 137. Okay, so an investment grade CFD is a CFD, all right, where you, for instance, you want to invest $1,000 into this move. You can now always buy each swing high. You can always buy each swing, okay, keeping stops below the low of the higher degree motive wave of the strength. All right. So technically speaking, seriously, technically speaking, I can buy any value here if I keep my stop below the top of wave 1 here. Okay. So I would have to assimilate my risk, meaning that I would have to, as the market goes down, I would have to buy very small sizes, okay, all the time calculating my risk and keeping my risk, my stop loss below the low of 0.1 here, okay, and I would hold all the way up, of course, to 135 and 137. So all the time I would, for instance, risk the $1,000, which would be 10% of the account, for instance, all right. So I would assimilate or incrementally buy as we go down. Of course, you will not get a test of 1.2840, but you will get, like today, a test of 131.50, maybe even 131, maybe even 113.80. Okay, so you fill many lots, all right, on the presumption that you're already risking the $1,000 all the way down to a stop at 1.2840. Okay, so you get partial fills. You will not fill all the way. Say you fill 50% of what you were planning to fill, or even 35%. When the market moves higher, once you break above wave 3 here, the high of wave 3 here, you do the same on the retraction, okay? You spill your entries again all the way down to the market low here, which was, suppose it was 129 something, the bottom of wave 4 here, all right? And you fill another for the $1,000 risk. By that time, of course, you will be already in profits. You will be already carrying positive PL because you have already loaded at lower levels. All right, and then you go on and on. Of course, every time the market rises and breaks a new high, you simply buy on the retraction, keeping your stops below the higher degree motive of the slope. Okay, this is a pyramiding strategy, all right. It's very risk-free and does not desire and does not need much time, all right, or screen monitoring that you'd have to do on a daily basis. You can just do the screen monitoring early morning or late night, all right, and review the market lows of the last higher degree motive wave of the. You never risk more than that, okay, all the way up until you finally make target at 140 or 137 or whatever it is. So when we're talking about an investment grade CFD, you would each hourly swing, for instance, keeping stops below higher degree motive for each swing, which is actually what we're doing now, and keeping your risk fixed. All right, okay. So why would this go all the way up to 140? Because of this fundamental factor here that the Bank of England will be implementing asset purchase program on a monthly basis, about 150 billion. Okay, so this is of course going to boost the sterling because a lot of purchases are going to be made in sterling against the United States dollar to finance the asset purchase program as investors move and buy into purchasing such British assets. Okay, so it looks like we have bounced. Okay, so you can consider not to close your longs now at 31. Like we have bounced, and we're going to test the moving average, and soon we'll be seeing an Elliott structure here that we can add into, and it's very effective to hold that bottom. At that point, if we go to 135, it makes us 400 points. If we go to 137, it makes us 600 points. Alright, if this is going to 140 on good fundamentals, remember that before the year end, there will be a Brexit deal or extension of that. We're going to test, as shown here, we want to hold it. We want to put and keep these longs. Alright, okay, so that's it for sterling dollar, I guess. Alright. To recap, we are buying against the bottom of the top of one here. This strategy, you could of course contemplate to do so, or you if it's not comfortable, do not engage. Everyone does. So what we will do here today is we will buy the market once we see an Elliott structure on positive momentum on the smallest time frame possible. We'll buy of course 50% into that Elliott structure. Like this here now is doing 131.62. If this completes into an Elliott structure, we'll not chase the market, okay, let it unwind, and then when we have 5 wave counts, okay, and this is positive. Alright, okay, so let's move on to the next issue. So our first issue is the euro sterling. Let's take the two questions first. There's a question regarding the United States dollar against the ruby. This is the Russian ruble. Okay, so let's do the euro sterling. So the euro. Alright, let's move straight to trade management. We are of course bullish that. Okay, so before we go to technical picture, let's first do the trade management. It's the most important factor that we should be covered with. Okay, so this is what we see today. Okay, remember of course that we are longing 124.20, 123.9, and 123.7. We are going to double at 123.4. Alright. And this is today's technical picture and daily pivot projections. Okay, so we should see today 123.4 or 123.45 or 123, and double our position size. If you have not already added, or if you have not already long at these levels, alright, meaning that if you have not already done this here, this was yesterday's strategy, or we were planning to buy 124.20, 123.90, and 123.70. These all should have filled, okay, because this was the market action exactly yesterday. The market tested a low of 123.70. So we should be buying into that. Okay. Alright. So what we will do today, if you have not already bought into that, this is what we're seeing. We're seeing a pennant formation. Okay. So C could have already ended at 123.7. But of course, we'll take the best that the market will give us. There's this potential for this to fall all the way to one again. You know, C to drag on all the way to 1.5. Alright, so if you have not already entered long, you would wait to see the 123.5 or 123.6, or you would wait to test the breakout low, the current breakout low zone today, always keeping your stop of course below the local point 1 here at 122.7. Okay, so this local point 1 here, this local wave here, may not be correct, and you market may still test top of 1 here. That we do not run into the same problems that, or the same element of fear that we did run into regarding the pound against the United States dollar. You would also contemplate that you may have to move your stop below the top of 1 here. All right, we do understand this will take us down to 122.30. Okay. However, we expect to bounce at the top of 1. We have to take the necessary risk to handle the trade. All right, so we will only add, or if you're not already long, you would only consider to long okay, once you see, of course. Alright, these are the smaller time frames that we go by. This is a 15-minute time frame. It is positive, of course. It is possible that this is a market bottom. Okay, we will have to observe it. The current correction that we have been showing is that one here. Take that down to the hourly, up to the hourly, so that it can be more. Okay, so this is what. This is why it is essential to wait. Okay, you can still see spikes. Down to 123.70 and down to 123.40, where we would like to long, so long as we are still above local wave 1. We have to be patient. Alright, this is actually 90% of winning the trade, because once we're in, okay, trending, then we just set and forget, we just leave it to target. Okay, so we have to be patient. Alright, so someone may ask, until we fill these levels that we plan to do, someone may ask that we already have positive momentum on the hour and positive momentum on the 15 minutes. Okay, and even okay, so why not go long? We have two consecutive cycles. All right. On the 15 minutes, there could be a bounce at over both levels. Okay, that would be good, but it doesn't look so in price. So resisting here, still moving down. We do have a five-way Elliott structure here on the 15 minutes, but more importantly on the hour, we are not okay. We have not yet broken above overbought conditions. Okay. And speaking of confluence in cycles, it would appear that both the hourly cycle and the 15-minute cycles are having negative confluence. They are both rejecting at overbought level. We still don't have confirmation that this has broken above overbought on the 1 hour chart. If it does break above overbought, we go long. If it is positive and we have a strong cycle on the 15 minutes, this is how we would read cycles, so this is how you would read momentum. Like this has already broken above overbought, that's true, but it's now resisting at overbought and it's cycle. And the 1 hour cycles, both are going to reject at the overbought level and turn down. So we would expect a retest, okay, of the lower boundary of that wedge, or that's the wedge, yes, or that pennant, or that bullish pennant, you call it what you call it. Like I said, you have to be patient. This is going to drag low, alright, all the way to retest again. Once again, 123.70. Maybe by tomorrow, if you drag this lower again, it will make 123.50 and 150.40. So if you're not already long, okay, if you're not already long, you would consider now to buy at 123. This is today's assessment of the situation. You could consider, you will do, of course, your own due diligence to buy at 123.50. The stop loss again at 122.70, that is that point here, that is your stop below local 1. Alright, and your target, our first target is 126.50. Now we understand we do not have to get scared if we are going to contest the top of 1 seriously and severely. Okay, we would still hold we keep a strong hand on our position. So you have to hold, as they say, unless you assimilate your risk and you are really taking on the risk that you can handle, okay, then this term is called that you hold a strong hand in the market. Alright, so our strong hand would mean that we can be pressured by the market to test the top of 1. Okay, so today and tomorrow we could think about buying 123.5. Okay, stop is 120. Our first target is 126.5. Okay, so let's take a look at targets. These have been updated too. And let's see exactly where this is going. Alright, so this is also expected to be an investment grade CFD because it's going to be bullish with the fundamentals regarding equity markets and asset purchase programs. Okay, so remember the cycle translation support line that we had on the 4-hour chart? Well, that one is superimposed here on the weekly chart. So this is the cycle translation support that we also found of, okay? And from that chart here, the 4-hour chart, we of course remember that cycle translation support and that this issue is bouncing, okay, at the cycle translation support and at the top of the local 1 here. Alright, so this cycle translation support reflects like this on the weekly chart, and we know that prices always exhausted, okay, above the cycle translation and broke over. So prices exhausted here and failed, right? And there was a double head and shoulder pattern or head and shoulder pattern here that failed also at the cycle translation support. So generally, fundamentally, prices could not support above this cycle translation support line, which is at that time was a resistance. Prices always exhausted, meaning that there was some strong fundamentals probably with equities, but they did not carry through. Alright, that was the ultimate value, okay, that you would purchase or pay for that commodity in order to conclude business in the asset markets and in equity markets, probably. Alright, so the last failure was here. We had price exhaustion 3 times above the cycle translation level. Alright, okay. Now we have a congestion below the cycle translation level. Alright, so these signals have always succeeded, like they are 95% valid. Okay, so that signal here took us above cycle translation level. That signal here is about, hopefully will take us above cycle translation level. Alright, and these signals here, you know, at the oversold level and the oversold level and the cycle translation level are very strong and very good signals. They're actually good for as much as 2,000 points. We're talking from 124 or 1,400 points, all the way down to 1,000, all the way down to 110. And here again, we're looking at 130. Your most reasonable target is not that, is that. That would be choppy. So your target is at 105. Okay, you're looking at something 2,000 points. So this time around, we will not go, of course, for 2,000 points. We will go for the next cycle translation level that's going to act as a resistance, and we'll go for 50% in between the two cycle translation levels. All right, we seem sure now that we're going to bounce above the cycle translation support. We have already segregated this, of course, on the 4 hours, and it is bullish, and on the 1 hour, and we just have to hold the position. We expect the target to be 130. So like if you're buying now at 123.50 and 123.70 and 123.90, you're looking at you're buying at 124, you're going to 130, which is 600 points. Okay, against, of course, a risk, I believe your stop to 50 and 122.70. Okay, so that's what's planned for that trade, and that's why it is important to try and accumulate in it. It would be, of course, treated also as an investment grade CFD as we move higher. You could, of course, ultimately, if there is a strong stimulus package, see 140, okay, but we will be conservative, profits at 130, account holdings, or trade this on a recurring basis all the way to 130. This is the daily chart. Alright, we're just about to get the breakout signal. Alright, and we're bouncing as advised at the top of the local one. So this is probably confirmed an alien structure. Okay, like this is a 1-2, and that is an internal 1-2, internal 3-4. That was an ending diagonal in wave 3. That we have now on the 4-hour chart. Okay, and we have broken out of this wedge. This is the bullish wedge, of course. We have the robust strong candle. That was yesterday's candle. Okay, and our target, this chart is for targeting our exit would be wave 5. Remember that this is 2 all the way to that swing here as a motive wave for which to project our fills. This swing gave us an exact projection for wave 3 at 138.2, which is 126.8. This is why our first initial target is 126.7. Alright, because that would make a double test the last stop made. We believe that would break, and this wave would give us a swing at 128.70. So that's where we would take profits for the current holdings, and that would probably be the top of 5. It is of course possible to see 130, but we have to be conservative, and I believe that when we get to have sizable amounts of money out in the market, we should at least take 70% of that table. Okay, so we will go for 128.7. Okay, so let's go back now to trade management. So if we are going to trade this on a week, if we want to intra-week trade this, you know, the term called intraday trading, where you take your profit at the end of the day or next day. Okay, so if you're going to hold the position all the way until the end of the week, you would expect to see 126.50, which is actually here 126.84 or 126.70. So we would take intra-week profits at 126.50. Okay, this is of course a 124. Where to go higher, of course, you would have to change that. Instead of 126.80 and 126.90, you would take that to 128.70. We already saw why we would be 61.8% channel inside the current uptrending channel. Alright, for the issue, we're doing, of course, a clear double bottom at the lower boundary of the channel. It's very logical that we should see 120. Alright, so let's move on to our next issue. And that would be take a few questions first. There's a question regarding gold. We'll get to that in short, so as not to dump issues. Okay. Alright, so let's do sterling yen. Let's take a look at the sterling dollar first. We are now 31.73. Okay, so not to waste time with this. Now you know what to do. You will wait for positive momentum. If you want to join the market, you wait for positive momentum in order that this is not a rejection. This area is very important. Okay, this is still below the moving average. And you buy 50% once you get positive momentum. It's always good to go on confirmation. Okay, so this appears to be bouncing. We are of course bullish. Let's go straight to trade management. Alright, and this is what we see today for trade management. Remember that each block here is one complete day. Okay? Alright, so we would expect there has been, of course, a length market, and it would be kind and nice to believe that we're going to bounce here and that's the end of the correction. But this type of correction is very small time-wise, not prolonged as this type of a rise. Okay? So we believe that this is a cycle. We still have more impetus to go down, okay, to say 38.2% at 137.7, maybe if not low. 1 here, okay, low of 1 or low of 1 there. Alright, so the current action that you see in the market is fake. I believe it is a fake bounce. Okay, we are seeing now a head and shoulder here, and this is what is shown here on the hourly. Unless this breaks above the low point here, the low point of 1 here, like this, the bottom of 1 here, and we believe we still could break the neckline, okay, and run down to test 38.2% at 137.7. Okay, so this is essentially our primary position was to buy at 138.2, 138.7, and I believe higher 138.7 must have already filled. Then we were planning to build 138. And we were planning to build 138.2 and 138.7 and double our position at 136.9. So in order to see if this is realistic, we would have to look at today's pivot levels, alright, to know what is going to be tested today and if these levels can be seen on momentum. Okay, meaning that does momentum 8.7, that point here. You could wish to take profits on the count bounce in wave B. Okay, so the count bounce will probably take you to 139.7, about 100 points. Okay, so I would close that as an intraday position. Scrap this out. This is 138.7 and wait for wave C. Okay, we're gonna see that tomorrow. We may wish then to begin adding at 1.2, that level here. Okay, and we will accumulate strongly at 136.9. The top of 1 here is 136.6. We will of course allow for spread and allow for the fact that projections, if we want to get into the market, we have to carry some risk. We will not try to outsmart ourselves by buying 136.7 or 75. We will have to carry. Okay, of course, when we do buy at 136.9, our stop, okay, gets moved to this point here. Remember, yesterday our stop was 136.2. Okay, at 136.6, we do not place a stop at 136.2 because it will get 0.02 or 136 because it will get spiked. All right, even if the market wasn't going there, it will be gracious enough. So we would move that lower below level 2, which gives us 135.5. Okay, so 135.5 is about 180 points in risk. Okay, between that position average, if we were adding at 138.2 and 137.7, these levels here, okay, and doubling at 136.9, you'll be having, with a stop at 135.5, it's about 180 points per mini lot. All right, lot of money. Okay, we're going for 145. This is the 1 to 4 risk reward. Of course, there are no values, no money values are placed here because you can then calculate your risk preference according to, meaning you can calculate your size according to your risk preference and the risk that 145. We are going to 145 because of this. We expect anyway to go to 145 because of the longer term technical picture. Okay, so this has been also updated. This is a weekly chart and we believe that the downtrend has completely ended. And that is cycle 2, completion of cycle 2. Now we're going to do a cycle 3. Now, cycle 3 could go all the way up to cycle 1, as you have a very, very strong equity market. I don't believe we're going to do that. For traders, that is. I'm not going to tell you we're going to see 60% of that cycle contested or 50%. We're just going for that trend line. Okay, so that's my line is 150 and we're going for 145. Please go for 145 and not 150 because this is the wave segregation analysis currently on the daily. Okay, so that was wave 5 here. This is wave 5 here. We have an ABC. Okay, and that C is a zigzag. We'll see why we actually believe it is a zigzag. We confirmed that a while back. Okay, so we have that. We have the C, that's an A, B, C. That's an A, B, and C is going to be an A, B, C. And that leg C, we believe is going to be our zigzag. Okay, so we are actually here now. On the daily, we'll note that degree 4, wave 4 bounced at the top of 1, and that degree 4 bounced again at the top of 1. Alright, so we expect this to be zigzag. Right? That wave at that top here is 137.6 and the bottom is 123.84. That wave, if you take projections here, you are going for 261.8%. You're going to see 144.3. Okay, all right, which is close to 145. If you're going to take projections, this is a zigzag line. Okay, there's an A, B, and that's a C. So we will take. When you're taking fibs out of 131.87 and 142.73. Alright, even very timid projections will give you 145.7. This is 127.2%. Then 138.2% gives you actually 146.86 or 147. 161.8%. That actually gives you 150. Okay, which is what we believe we should be seeing here. So we could probably have potential for that trade to go all the way to 150. Okay, and we would want to be in trade at these levels of 137 and 138. Okay. Or at least we will take our profits at 145 as outlet. Alright, so this is the pound market action, of course. That was yesterday's action. We tested the neckline. Oh, sorry, we only tested 138 point, I believe, yesterday. $138.6. The car market currently tested only 138.38. Actually 138, and we will test lower than the neckline, these ones here, tops of ones, and that is 136.9 and 137, which is where we will maximize our entry. And this is the zigzag that we're talking about, and we're going to push 145, target the zigzag is 146 as shown here. Alright, we're currently doing the right shoulder, okay, of this inverted head and shoulder. That right shoulder, if it bounces at the top of that left shoulder, you're doing 136.9. You should be doing more, but we have a lot of ones here, so we would expect to bounce at least. Hopefully to bounce at the top of that left shoulder. We want this to happen, but there is no telling, really. Okay, so could be wishful thinking, but we'll just have to be patient and fill at the best values that the market can give us. Okay, so the best values that the market can give us. Remember, we bounced at 137, say 138.7. If you have loaded 138.7, you may wish to take profits at 139.7 on around 139.7 because you're going to see lower prices now. Okay, we expect to see 7, and then we're going to run down to test that neckline, alright, and gives us 136.9 on top of wave 1 here. Alright, we would of course consider them to sell if you see of course 137.22 and there's a market strong round market reaction at that area, then you would of course consider to enter long at 137.2 or 0.3 instead of 136.9. Good. So that is trade management. Alright. We will not chase the market. Finally, to recap, we will not chase the market. We expect to see another leg C down. It could terminate at 137.7. It could terminate anywhere between 137.7 and 136.6. So we could begin to buy C at 137.7. We have potential all the way to buy as far as 136.9. Okay. We will take profits at 145 or 146. Alright, we move on to the next issue. This is going to be the United States dollar against the Japanese yen. Alright, we treated that of course yesterday fundamentally. The market moved higher and we're doing an ending, we're doing a bull flag, alright, so let's check on that. And there is our bull flag, it's still there. So expect this to move higher, being a bull flag naturally. Let's go straight to trade management and not waste time with anything else. This is today's trade management, okay. So yesterday we're expecting to see 104.85, 104.6 and 104.39. All this is not going to happen. I don't believe the flag will break lower. So we have raised our Okay, we have raised our interest to buy the lowest boundary possible in the flag. We already filled 105.2. We would expect to buy market. Okay, like breakout pivot for the week. So this issue is in a bull trend. Alright, if you break above the current issue of the week and you're barely testing the breakout level, alright, you must be very strongly bullish and you might as well buy any test of that breakout level, okay, with a stop at 104.4. We'll see why the stop is 100, okay, on the trade management chart, but it is essential to understand that we're going to see high levels as high as now between 105.3 and 105.6. which is currently what is happening on the market. Really, we're seeing here 105.6 and 105.3, and we're going to zigzag in this level until we move higher. Okay, so we might as well buy the market, like now it's 105.2. If you want to get into this market, if you're not already long at 105.2, you would consider to add or buy now at 105.2. This is going to 109.5. We think we are not really sure, but we will look into detail in that. So, if we do buy the market at 105.2 currently, your stop is out of the day range. Okay, so out of the day range, today's range is at pivot levels for today. Quite high too. Alright, so the breakout low for today is 104.73. Okay, so we will go below 50% of the current motive weight, and out of the day range will take us at least to 104.6. So we place that at 104.4 to be entirely out of the 50%. Okay, alright. So if you were like yesterday, your stops were below the local point of 1 here. Now there's no need for that. We will remove that. If you're already long at 105.2, you don't need to put your stop at 103.75 or below 103.5. You move your stop higher to 104. Alright, so this issue is not really very bullish. It's clear, of course, now, so that you can see the cycle range. Okay, and if you zoom out of that chart, okay, so that was back in 2016 when Trump won the election. Or it doesn't matter who won the election, that was the US election, okay, 2016. Now here in 2020, the the latest spike that has affected the issue, of course, was the corona spike. Okay, and that was here this current election. There is fundamentally a problem with the United States dollar against the yen that we'll speak about shortly. But the important point to note that this fundamental problem will give us a spike. This is the daily cycle. Alright, will give us a spike maybe to 61.8 or 50% of the daily cycle. So you're looking maximum to contest 109.5. Okay, so we will no longer see this kind of action because done is he has broken supply chain cycles between Asia and the West and the United States. Okay, so meaning that now it's like we're going to have moving forward two kinds of economies. All right, each economy has its own supply chain. When we talk about supply chain, we are talking about exchange of money, exchange of legal tender. Okay, so if you're going to be importing materials or raw materials to China, you would be using probably suppliers in the East, no longer in the West. This is the problem created by trade barriers that President Trump imposed. And if you're doing the same in the United States, this was his policy. He was trying to promote manufacturing and trying to promote technology. Nobody should steal American technology. So he does not even export technology, so there are no supply chains now between East and West. At that time, when Trump took power, there was strong supply chains and strong trade between East and West. And therefore, when he did take power, the market intercepted this, that there was going to be even more trade and it's time to invest in such supply chains. So the dollar rose very high against the yen, okay, on risk appetite, okay. It's already discounted in the market that there will no longer be the same investment or supply chains between East and West, and therefore the exchange rate between the United States dollar and the yen will mute. It is no longer actually required, okay, for legal tender and trading between global supply chains. All right, so you would right now you would just expect to see the maximum this cycle is going to do. It's just what is the moving average, try to support and then hold back. You will note that already momentum is negative on the daily. Momentum, of course, at Trump's time here was very high, very positive and strong. All right. Okay, so probably one of Trump's when you're thinking of exports from the United States, you would take into account that the most important and vital commodity that the U.S. actually exports is the U.S. dollar. Like the U.S. supplies the whole world with dollars, okay, and if there's not going to be demand for the dollar, then the U.S. will not be supplied. It's just like exporting a commodity. Right? You don't. Okay, so let's move on to our next issue. This is the euro against the United States dollar. There's a question here regarding gold. We could consider to do gold first before we move on to the euro. So let's start on gold. someone yesterday was short at the 1,860. Either they were able to get out of the 1,800, I hope, at 60, because this looks like it's going to invalidate in a short while. Anyway, this is what we're seeing today so far. We already did. Alright. This is of course a degree 3 breakout. However, the correction, I believe gold of course is a very resilient commodity, and therefore we'd expect to see a correction in line with this head and shoulder formation, meaning that we will be contesting, levels all the way up to 1,920, and this means that we should short these levels at 1,000 to trade the commodity with stops above the market high at 1,960. Our targets again, as advised, 1,840, like advised yesterday, and as advised yesterday at 1,820. Okay, so let's take a look at trade management today, and this is what we are seeing. Okay, so there's a bullish and bearish scenario. We're probably now seeing the bullish scenario. Naturally, very strong bearish momentum shown here. Let's zoom out of that. So it's very strong bearish momentum, okay. However, we're still doing a correction forward. We contemplated yesterday that we could be doing a correction forward, or we could be doing a breakout of 5. We were not sure at the time. Well, we tried to point that out and decided to take risk that it was going to be a breakout in 5 all the way down to 1,840, but that was not seen. Right, the maximum market shows 1,857. Okay, so this is what the market is currently doing, a bearish pennant or flag, or sorry, bearish pennant or bearish triangle. And that is shown here. It's going to contest that neckline. Alright. That is what is being assumed, and the maximum levels you should see for this today's highest pivot that you can actually see is 1,890. Okay, but of course at 1,890 the pattern would be invalidated. Alright, so if you're still holding the short, alright, you remember our stop was 1,880 and 1,885. It is in the breakout pivot section. Right here is 1,883. So you just hold it there at 1,885 because there's very strong potential that there will be a rejection at the top low zone here at around 1,877 right about now. Okay, if we're going to reject at this neckline. Alright, we're going to of course move into that pennant and then break lower. Alright, so the bearish scenario calls that we wait for a breakout of that pennant higher and either sell the breakout high for the 38.2%, okay, at 1,920. Alright, so if we do sell at 1,920, this is what we're going to be doing. We'll enter at 1,920, 1 mini, selling. 65, it's about $450 risk, and we take profit at 1,840, and 1,820, but I believe we better take profit at 1,840. Okay, so if you wish to go long, of course, I would not really advise that, but there is potential. If you consider this to be a bullish strike, there is positive momentum to go with it, so it's not really a bad idea. It's not a bad intraday trading that there is, and you would do this. So if you are actually short at 1,865, I believe, you may wish to get out at 1,807, 1,868. That's about 50% here. Okay, to break even and go out of the position, or not even break even, but go out at minimal losses. Okay, would rather long higher, short higher at 1,920. Currently, for the time being, you would want to enter longs at 1,870. You may consider to do so, and 1,865, alright, right above the top of this 895 and 1,905. So 1,895 and 1,905. This could be a good day trade, alright. There is no positive momentum on the hourly. Okay, you have to bear that in mind, and we're still doing a correction 4. Okay, so it's really your call. But the problem with these patterns is that everybody can see that we have a bearish flag here, so everyone will be shorting it, and probably some traders will be running the shorts, and this is why you could see this go high all the way to 1,920. So this is our stance. If you wish to long it, you could do that against, of course, at your own risk at these levels. Okay, if you wish, if you do not think it is worth the effort, I would rather wait until we see higher levels all the way up to 1,920 and short the higher levels. Okay, so we're looking at 1,924. There our fluctuation high for the week. Okay, and we are currently here 1,878, testing the open for the current month. Alright, could be a good sell point.